Let's go to Market Watchers Larry Glazer and Matt Cheslock. Matt, ended with you, begin with you. What do you look for to potentially change things, whether it's buybacks or whether it's companies or individuals getting brave? What?
Well, look, sentiment has been pretty bad for the last couple of weeks. We've seen market rallies fade throughout the day. That's disconcerting if you're a trader. Yesterday's reaction, Shanghai was up 4% to start the day. We had a good Monday opening. We faded through the day. Now we're continuing that trend. So we need to see a change in sentiment. And possibly we were hoping that was going to be around earnings. That's not provided it. That's been kind of the one-off. You're seeing the McDonald's perform, very well, but the other one's really suffering. So until that mantra, that psyche changes, this market could, hopefully, if we just traded sideways, that would be a good thing. But right now, the glass is definitely half empty.
So, Matt, on that point, and just to follow up, when you see a McDonald's come out and report that it's doing very, very well, a higher price menu is leading to much stronger sales, that has the stock up appreciably. Last I looked, it's up about $9. That is something that surprised the street on the upside. But even when we get better than expected earnings out of companies, it's either their guidance that worries folks or the fact that the environment doesn't look as good. Caterpillar comes to mind, Boeing and some others come to mind, 3M. What's going on?
Well, Caterpillar would be the prime example for that today. Their earnings were not bad. Top and bottom line beat. Forecast was in line, but they lengthened it a little bit. They grew it out to account for some of what they can't account for, maybe in China, maybe in the energy costs, things like that. So they have a chance to beat that. I heard one analyst say they didn't beat by enough. Well, they beat, so that's what the market's looking for right now. And that's why when the sentiment's changed a little bit. And that's what we're going to have to hopefully get changed now that we get PE values maybe a little more attractive for the investor.
That's interesting. Larry, I want to follow up on the Caterpillar issue with you, because among the many things that sort of rattle the street and has it now in bear market territory, in other words, down 20% or more from its highs, is this notion that it's facing higher material and freight costs as a result of higher steel prices and tariffs. It's the first and strongest clear indication that this trade war with China is weighing on them. What do you think?
Look, there's no doubt when the NASDAQ has its worst month since the financial crisis, you're going to get people's attention. And there is a change in mood on Wall Street right now. And that change in mood went from that sort of happy-go-lucky, very optimistic, trees grow to the sky, this is going to be real easy, I'm an optimist environment, to now everyone's worried about this global synchronized slowdown or recession. And I think if you look at Caterpillar's earnings, you look at 3M's earnings, Caterpillar had great earnings.
That's
Q3
right.
was their best Q3 ever. I think the concerns are that they didn't raise guidance. Valid concern. Fears about the future, fears we may be at peak earnings. That's a far cry from being in a recession. And I think people need to take some semblance of that.
Larry,
earnings may have been up too
Matt's
much.
point, which I found was fascinating, that,
Sure.
he didn't say this exactly, but just we used to slough off the worries and focus on the good.
Right.
Now we, focus on the worries and slough off the good.
Right.
And I wonder whether that is just a seminal shift here or a brief one. What?
Sure. Well, I think the market was unprepared. People were prepared for a bond bubble. They were prepared for the economy to be too hot, for the Fed to raise rates too much, and they were sort of moving into the cyclical names, moving into tech names, moving into companies that weren't making any money in IPOs. Now they have to have a more balanced posture here, recognizing that earnings may not grow at the clip that they thought they were going to grow at. Some of that may have been front-loaded at the beginning of the year. Trade concerns, earnings were not the only issue today, but they were the catalyst for the sell-off with 3M and Caterpillar. The bigger issues are we still have this geopolitical trade uncertainty, but earnings are where it's playing out on the field. And I think right now, input costs are a concern that could be remedied if we get through trade, we get through midterm elections. But right now, the party could be over in terms of making this an easy run if some of these issues are not remedied. But we don't know whether they'll be remedied or not. So investors want to take a more cautious posture going into that. And, Neil, I think that's a good thing. If values come down and volatility gets high and volume gets real high going into earnings season, we're going to see some real buying opportunities here that we haven't seen in some time, because the rate of the market decline is really accelerating here. So that's an opportunity for investors who are nimble, who have a little bit of cash maybe. And most investors who are fully invested going into this, maybe we're too aggressive and too optimistic, and they're feeling the pain right now, justifiably so.
Matt, is this a cheaper, more viable, affordable market to you?
You know, what's funny is that you never hear the people that are, dollar cost averaging on the way down in a market like this. You generally hear it on the way up. So,
right.
you know, this is when you want to start putting some of that money to work if you felt like you missed the market. If now the PE is more attractive, you should be buying it. But we're seeing signs here, gold strong today. We're seeing the 10-year strong. So there are signs here that maybe there is a little bit of hesitation right now, and they want to see if this sell-off gets overextended before really starting to enter the market.
All right, guys, I want to thank you both very, very much.